Hello, everybody. My name's Tony Cardenas, and this is the Indy Real Estate Market Weekly Podcast. Today, I'm sitting here with Shelly Walters with FC Tucker, Kyle Morris with FC Tucker here in the Carmel office, and Justin Griffith with Keller Williams, Indy Metro North. Hey, Justin, how's it going?
I'm doing well. How are you, Tony?
Good. Shelly?
I'm doing wonderful. Thank you.
Kyle, how's it going?
I'm tired.
Are you?
Good.
Hey, you been selling a lot of houses?
Yeah, it's been a lot out there, but weather helps.
Yeah, you know what?
Helps.
I think the market's changing just a tick, I said.
I agree.
But hey, let's talk about it. What are you seeing in the market right now, Kyle?
I'm seeing more houses come on the market. It's super, super competitive. I mean, it's just getting worse. I mean, worse is a relative word, I guess. But I'm just seeing more. And I'm seeing better selection and things like that. I mean, you got to be very, very active to be out there. But at the same time, I'm seeing a lot of good stuff. And then I would say down inside the loop and stuff like that, we've been having a lot of luck with like sub 200 stuff too in the past probably 2 weeks. We've been getting a lot of stuff with down payment assistance, and there's just a lot on the market in that price range as well right now.
And along with that, the rates have kind of ticked up a little bit. Not too bad. But, a lot of people are getting requalified because they've been qualified on those lower rates. They got to look at that to make sure they can afford the house and not have a payment shock. But, Justin, what are you seeing out here?
Inside the loop, the numbers are down substantially over last year.
Okay. Yep. Well, we know that, but...
by about half. So it's about the opposite of what Kyle's seeing.
Well, Shelley
where he's at, yeah.
I know, but, right. Shelly was just talking about prior to the show that... Shelly, let's talk about Carmel, what it was like a year ago to what it is now,
Yes.
as in the listings and the market.
Yeah, so Carmel doing the stats for the last year, this week, 2022, there were 70 homes that hit the market, and this week it was 36. So we are down 50% in Carmel with we always had all these people that, they kind of generalize, the past 2 years. This year is just a... totally different year from the last 2 years.
And that's all that matters right now because this is what the people are buying.
But people just keep saying the last 2 years, and we're a continuation into a third year. I don't feel that we are into a third year of the last 2 years. I think we're in a totally different year again. So if we just look at the stats for Carmel, again, like I said, only 36 hit the market, 23 of those pended. So
that's fast.
Median day on market is 5 for the past 7 days, and the past 30 days it's been 4. So we are really the houses are going fast. And the other thing I think we talked a little bit about last week, and what I'm seeing more and more of, is these houses aren't being left open for sale. That people being able to look at the house over the weekend. A lot of houses are selling within that first 1 to 2 days. If we wanted to really look and see how many houses are selling,
but wait a minute, what do you mean by that? They're not being left open. Explain it to me.
Well, just because when we used to say if you had an average day of 4, that would be, basically one house would sell in 4 days. That was our average because everybody would put the house on the market and let the sale happen for 4 days. Let the buyers get in and look at the house for about 4 days. And then all offers would be due on Monday or Sunday night.
But if they're buying the house.
They're not. We're not seeing agents keep them open anymore.
But let me ask you a question. Why would I want to? I'm selling my home. Mm-hmm. You sold my home. I accepted the offer as a seller. Mm-hmm. I don't want anybody else in my home.
Well, so the
you want more people in them.
Yeah, but why do I? If in case
to get a better offer.
Well, because last year the offer.
But wait a minute, I accepted the offer. Hold on, I accepted the offer. Why do I want to let more people? I'm just asking a question.
No.
That's what we're trying to explain. So, last year is what we're kind of going off of. You wouldn't have accepted the offer, okay?
Yeah, but that's not...
Hold on. No,
you knew you were going to get multiple offers.
Yeah.
Right.
So people are coming in, and because interest rates were lower last year,
course.
That was generating even
multiple offers.
Not just that, even more exorbitantly over list price. And now, because we have still increased in property values this year,
absolutely,
I don't feel like and people are a little acclimated as to what an offer would take in those situations. They're offering on day 1 and day 2, and you're getting $60,000 instead of waiting until Sunday. And people are, to your point, are just doing it. We're just saying it's different from last year,
right?
Where we drove it until Sunday because there would be more people in there. The offers are just so competitive now,
but
that it closes the door.
I agree with that, but my point is, if I accepted an offer and Shelly was my realtor, I said, "That's it, we're done," and it's a solid offer.
Well, that's
I don't
yeah.
want
That's what
I
we're
don't want
saying.
anybody
That's
else
normal,
to-
too.
Tony, you're not listening. That's what we're saying.
It
That's
is
what
happening.
agents are doing,
Right.
and there are no more showings.
Right.
So
Yeah.
if you,
Yeah.
as a buyer or a buyer's agent, are not in that house within that first day, there's a really good chance there's no opportunity
Yeah.
the second day. And that's not the way everybody was doing it last year. Last year, people were giving like 3 to 4 days to allow other people to come in. All the multiple offers were driven up. But
Right.
exactly what Kyle just said, I think agents have become very well aware of how to write a very good offer nowadays. Buyers are more
Exactly.
ready to it. And so offers that are being written on that first day are so competitive that sellers are like, I'm out, I'm done, I'll
Yeah.
take it.
To your point, because like I don't want to hold the house open
Right.
all week.
Gotcha.
Let's go.
Okay, makes sense.
We're just saying it's different from last year where we kind of gave an extra couple days and it's just not happening.
So
All right,
yeah,
so enough on that. Let's recap
Okay, so-
Carmel and go to Westfield. Just,
Carmel had 36 hit the market, 23 pended. Currently, there are 77 active in Carmel. Only 46 are resales. So if you look, I just wanted to break that down because we look at it as, a number of 46 houses for sale in Carmel. What does that mean for an average buyer? So if you're a buyer in the price point in Carmel between 200 and 400, you have 4 homes to look at right now. If you're in the price point of 400 to 600, you have 11 to look at.
Gotcha.
If you're between 600 and 800, you have 7. 800 to 1 million, you have 6. Well, if you're over a million, you have 13. So go to that
Makes
price point and you have a lot more to choose from. But anyway, in the past 30 days, 121 homes sold with an average days of 4 on the market. So these
good time to
days
sell a home in Carmel.
Yeah, days on market are very, very fast right now. Westfield, 49 hit the market last year, was 47. So it's about the same for Westfield. 21 of those pended. Average days on market was 4. The active homes in Westfield, 170, but 92 are new builds. Again, we always talk about how that's real big misconception of what's really available out there.
Some of those houses going to take anywhere from 8 months to.
They're not
18
really
months.
available. You
Yeah,
can
it's
go.
dirt.
You can
When
go.
I looked
It's
this
listed
week,
dirt.
60% of the market in Westfield is new construction.
Right.
Yeah,
Yep.
yeah, and that's so that you're down to 60 homes available. 30 days past, we've had 121 sell, 9 days on market as the average. In Zionsville, 16 hit the market 1 year ago, 19, so about the same for Zionsville. 11 of those pended with an average days of
Hot market in Zionsville.
Yep, 4 days on market for them. Currently active in Zionsville, 44. Nothing out there for them, hardly. And 48 have sold in the past 30 days with an average days of 3. So we are at 3 and 4 in Carmel, Westfield, and Zionsville, average days on market. So if you're wanting to sell your home, it's a perfect time.
Okay, hold on for a minute. Let's shift over to Big Daddy Kyle over here in the Fishers area.
Never make that sound again. please. Anyway, so what I was saying though, like as I get ready to go through this into like Justin's point, so we are way down from last year, right? But I work with everybody on this podcast works with buyers and sellers both, right? Like we don't do exclusively just listings or just exclusively buyers. What I'm looking at is my current pool of clients that I'm working with to try to find a property, and I just looked, and this is the most houses that have been on the market in the past 15 weeks.
Okay.
That's what I mean. Like I'm
How many
dealing
homes?
So for Fishers, I have 79 on the market, right? So we had 48 go on the market, anywhere from 190 to 2.1 million. 20 are still active. 28 of them pended. 40 actually in total pended last week, with an average of like 20 days on market. But even then, it was actually down to 5 when you actually looked at it, because I had one that had been on the market 295 days, which disproportionately affected the numbers. And then in Noblesville, we had 33 go on the market, anywhere from 152 to 936. 21 are still active. 12 of them pended, 23 total pended, 85 are on the market, and days on market there is 15, which if you remember, like over the past like 6 months, Noblesville has historically been higher days on market, and it is now less than Fishers is currently.
Okay.
Crazy.
So what do you expect in that market? I mean, that's a market that has a little bit of inventory.
Yeah, it has more than, it has more than Fisher. It has just about more than everybody but Westfield actually right now. So,
Okay.
yeah.
And are the houses going at list price? I know that's a tough question.
Yeah,
Big
I mean, that's
sales
now.
right now with the builders. Every week I'm getting notifications on price drops, new move-in specs ready, interest buy downs.
I can see that in the building world, but when you want to buy a house that's ready to go so your family can move in, I think you got to knock all that out of the way and that seems to me the person that has a nice home that a realtor has listed, it would seem to me that you're probably not going to discount that house.
Well, you're not going to discount it, but your question is what are the prices going for these? And we can next week we can really look at this
single homes.
Yeah, for
not
the past
builders.
30 days
Okay.
we can start looking at that. But I will just tell you that in my experience the past 2 to 3 weeks, and the prices between 400,000 and 700,000, it's about 10% over list is what
I
I'm
agree with
seeing.
that.
Okay.
So, but you look at below that when you're looking in what you had already said, the
Right.
100 to 200 price point, 100 to 250,
Right.
they're not going to go substantially over, because this is a price point where people are barely able to have their down payment with these new interest rates. So you're not
Right.
seeing escalations on the 100 to 250 to 300. It's where they start from 400 to 700, where people have a little bit more income available to throw at a price. And that's where those are the houses that usually sell within the first day or two, because these people really understand now. Throw $60,000 to $70,000 at it as an over, do the appraisal gap, do all that stuff. But you're not going to see that in the 100 to 200,000.
So last week we got one that was, I don't know, it was like 110, right? And we got it for 1,000 over list. We got one that was closer to 2. We got it for 2,000 over list. But we got one in the 6s, and it was $60,000 over list in Carmel, right?
That's crazy.
So,
Well,
we're
they
still
usually-
writing offers like that at the low price, but it's just like, is the appraisal gap coverage there?
Exactly.
Stuff like that.
Exactly.
But when you're starting to talk about $1,000 to $4,000, the odds that an appraisal is going to catch that and you're going to be okay and absorb it anyways is
Negligible, yeah.
I want
Yeah,
to
it's gonna
touch. I
happen,
want to
most
touch on
likely.
something so our listeners understand this.
Yeah.
Okay. In a short paragraph, explain appraisal gap so they understand what's going on.
I can let you guys take it. I mean, feel free, one of you guys to speak up if you want. It's pretty easy to understand. Once you understand it, it's a complex idea, but
Right.
I think we can explain it here if one of you guys want to take it and explain it in layman terms. It's just basically guaranteeing the offer to a certain
Okay.
extent.
Yeah, say you're buying a house for 500, you have appraisal gap of 20,000. So if for any reason the appraisal came in 20,000 less, you're saying I'm going to pay that difference before the offer's even
On the
accepted.
purchase agreement.
Yeah, so you know that they have the funds. You're not going to have any other hiccups come up with the house financing or anything
Or the
like that.
lender,
They're,
right.
they're just a very valid
Okay.
buyer.
I just
And
don't
that
think
is-
all of our listeners
That's on
know
top
that.
of the down payment.
Right.
Yep.
Right.
Yeah. So another 20,000 above and beyond your down payment is now being brought, even though you were just told it's not valued at the price you
Exactly.
you offered.
Okay.
And
I
so
just-
when we're talking about $20,000 over list, I would say majority of all agents, they price a house correctly. We put a lot of time and effort into pricing a house. $20,000 over list, realistically, like it most likely will not appraise, and we need some kind of guarantee for it. We start talking about something that is a little bit lower price point, $1,000 to $5,000, like that
I got you.
that
No.
can be subjective.
I
with
just
an
wanted our
appraisal.
listeners to understand that, because somebody did ask me a question about that about 3 weeks ago, and I said the next time it pops up, I said I just want to elaborate on it a little bit. So thank you for that. Okay,
Well,
Justin.
I will just say real quick why that came up is back in the day, 2 years ago, when everybody would start saying, I'm going to give you $550, even though it's listed at $5. It was a ploy to get chosen as the offer. So my offer really was a fake offer, because they're like, we know it won't appraise. And then we'll get into the old-fashioned days when 5-6 years ago,
Negotiate.
when you
Yeah.
negotiate now. So the seller is now like thinking they're getting $550. They've turned down $510, $520, $530,
Absolutely.
but they saw a $550. And we came to the conclusion that, wait a minute, if you're going to say $550, guarantee it. So you were to guarantee 100% of everything you just offered. So if the house is listed at $500, we want 100% appraisal gap for that offer. So if you get appraised at $500, you're bringing that extra $50,000 to closing.
I'm
And you
glad,
don't
I'm
have to
glad
do the
you did
100.
that extra
You-
step
you-
in this too. I really am.
You could offer 50 over and guarantee 15 of it, or 10
Yeah,
of
I
it,
got
or,
you.
you know what I mean? Like there's a bunch of different.
Well, we
ways
got
to
the
do it.
idea down. I just wanted the listeners to hear, and some of the newer agents here. We got a lot of agents that listen to the show. And as you know, Kyle and Shelley and Justin, they reach out to you. Okay, Justin, let's move over to a Broad Ripple down here in the Indy market.
Yeah, so like I said, my numbers are down substantially. I think last year I had about 5 times the amount of listings active. But right now we had 7 new hit the market, 5 of which pinned in Broad Ripple.
Broad Ripple, okay.
Yep, and that leaves 10 on the market, priced anywhere from 115 up to 1.5 million.
And what's that average of 756 I see on your page?
Well, we had 2 closings last week, so one of them was 925, so that really skyrocketed the average. Yes.
And days on market is what?
Days on market average is 15 and the median's 8, so still extremely low.
Okay. And what about Meridian Kessler?
Meridian Kessler, we actually had a lot hit the market compared to months past.
Gotcha.
We had 13 active, 6 of which are pending. We also had 6 closings priced anywhere from $289 up to $865. Average days on the market was 9, median was 6. Bates Hendricks was pretty slow. We had 5 new hit the market, 4 of which pended. Actually, 3 of those were listed over 7 days ago, so
Gotcha.
they're not really truly accurate. 9 total listings, which is extremely low, priced anywhere from $255 to $490. And we had 1 closing for $325.
Okay.
Sat on the market for 3 days. Lastly, Fountain Square, we had 2 new hit the market, 1 of which pended. We have 22 active, priced anywhere from $175 to $695. And we had 2 closings, average price at $237. $139 was the low and $425 was the high.
Okay.
It's weird, like, as you're talking about the inventory was being low in those areas, because I want to say it was like last summer we were talking about how all the inventory was downtown, and it was all the condos, and like that was the only place you could find inventory was downtown last summer.
Well, 22 in Fountain Square sounds
That's a lot.
high.
That is pretty high for lately.
Okay,
yeah.
I was going to say,
Sounds like a lot, right?
Yeah.
Fountain Square is a pretty small area.
Yeah, and it's hot right now.
I
you
need
know?
some of those to sell because I got one coming up down there.
Do you?
There you go.
I want less competition.
I have one coming up in Broad Ripple, so I'll be one of yours, 1 out of 3.
Oh, yeah. Absolutely.
Can we tell anybody the address?
Nope.
No.
My sellers aren't quite ready.
Yeah.
I will say something else I'm seeing, and I don't know about you guys, but just looking at the numbers right now, like we have low inventory, the rates are high. I have a lot of clients that are wanting to wait right now. But what I see happening is next year, say rates start to come down, because it doesn't look like they're really going to come down much at all this year.
No, they're not. I'm telling you, you got an 18-month. I'm just telling you, Wall Street Barron's report. We're talking 18 months before you really start seeing something. I'm gonna hit on the 18.
Yep. And I feel like a lot of people are waiting, and say for instance, like last year you're approved at 400 and now you're buying at 250.
Right.
You're not buying right now because you're looking at about half the price. So next year, or whenever the year, when the rates start to come down, we're going to have even a bigger influx of people that have been pent up buyers, and it's going to continue to raise the prices. So
raise the prices of the houses. So here's what's going to happen in my eyes is that it's going to knock some buyers out, obviously, but it's also going to make some buyers get in the market, right?
Yeah.
And the people don't want the 250 home today. What will that 250 home be in 24 months?
Well, that's what I was going to say. Is it's going to continue to go up? Like whenever the wave of buyers comes out when the rates start coming down and they realize they can afford more, I think it's going to be even worse than it was 2 years ago.
I agree with that, because to your point as well, Tony, it's like, okay, so you don't want to pay your 6.5 interest rate, so you're going to wait till it's a 5.2, but it's going to to be 30% higher.
I'd rather pay
6.5.
because the 6.5% interest rate for 18 to 24 months is a heck of a lot less than
So you can refinance, buy it now and
easy.
refinance. Yeah.
Oh, easy.
Or buy now
It's
and then
gonna be-
resell in 2 years,
But
and then you've got equity. I mean,
But it's hard. Like, I'm an agent. We're all agents here, besides Tony, and it's, that's a tough situation to be in. Like, I can tell you what I would do. I'm not currently doing it because I'm just happy in my house. But like to say like these are easy decisions to make,
They're not.
Not at all.
But you got to understand the math and the equity. You got to understand the math and the equity.
Yeah.
We need to do an example like we did a long time ago, Shelley.
Yeah.
We need to do another example of what if a 250 goes to 325, and do you pay the what if price with the high interest rate today, or vice versa? And we ought to do a breakdown on that. That's easy for me to do. I'll have Shelley I'll do the numbers, and I'll have Shelley go over it with me. But the bottom line is, you're going to have interest rates come down 18 to 24 months. You're going to see the first dive of refinancing, and then you're going to see the second dive of refinancing. You look at it every time in the Wall Street Journal, and then you're going to see the third dive. And after the third dive of refinancing, that's going to be your lowest rate level, which would take about a 3.5 to 5 year span, right? And then that's a cycle. It's all going to start all over again. But I have no idea where this inventory is going to go, as in the appreciation value between like Carmel. Some of the numbers we get in Carmel, it's just crazy. And some of the numbers we get down in Broad Ripple are crazy. The houses in Broad Ripple are going up so much quicker, really, than the houses in Meridian Kessler because they're affordable.
Well, and I mean, I've grown up in the Indianapolis area, went to North Central, so the Broad Ripple area is kind of a little bit, just amazing to me when sometimes you tell me what
Some
the
of those
average
houses
sale prices are.
I know.
Some of those
You're like,
houses I
what
used
the
to
hell?
refinance for $80,000.
Yeah, yeah. I mean,
yeah, there's one listed for 1.5 right now.
Yeah.
I mean, it's,
yeah.
I know it.
It's
That's
crazy,
just
but
crazy.
to your point though, like I think, I don't know what's going to be like next year or the year after that, but I was reading an article a friend of mine sent to me, And like in the next 10 years, we're poised to have the greatest transfer of generational wealth
Absolutely.
ever, right? And
Absolutely.
like I'm not lucky enough to be one of those beneficiaries
Yeah, you will
of
be.
something
Same.
like that.
I mean, look.
It's just not like my family situation, if that makes sense. But at the same time, like, it'll be more expensive, but people will be in a different situation financially because of what the baby boomers have been able to accomplish. Absolutely. And all the amount of money and wealth that that's when we really started learning about 401ks and all these other things, and people started to save for retirement better and better and better. And that will get started to be passed down in the next 10, 12 years. Right. And so I don't know if it's just going to make things worse because there's just so much money in the market these days. And you're going to just end up with a whole bunch more.
Well, a lot of cash offers too, which was we never saw. I just have a buyer that I'm working with right now, and I have been working with them for about 6 months. They kind of come and go. And, you know, we've said on the podcast, which would be fun to go back and listen to a year ago what we were predicting, and 2 years ago what we were predicting. But I know very much that in January of this year we were saying buy now, buy now, buy now, because we were saying it's going to get worse. And it has, and it is. And I had a conversation with my buyers when we went out and looked at houses again. And they're like, well, what do you see happening? What do you see happening? And I'm like, well, we had this conversation last fall. And what I saw happening or thought we saw happening already happened. Mm-hmm. And now it's happening double because it's happening even again. And that is in regards to these prices are going up. The rates are going up. So every time we say now is the time to buy, now is the time to sell, it changes. And in 3 to 4 months from now, that was a great time to buy. We're in today. So today we're in a market where in January we were saying buy now.
Yeah.
So we keep saying buy now, but it just keeps getting more and more unaffordable.
Right. But here's what the problem is. Like buy now, if you see a nice house out here, and I'm going to talk about Carmel right now, or anywhere, but if you see a nice home here in Carmel right now, or you see a nice home in Broad Ripple, if you better buy it. Yeah. Mm-hmm. Because that house won't turn for a long time. Remember, you got a new buyer in there. What's the average for people staying in their homes now?
7 to 10.
7 to 10 years?
Well, it's been less over the past 2 years because.
But the bottom line is, you see a nice home in Carmel. It's like, Shelly, you just bought a new home that's going to be that's under construction. You know what? Thank God you bought it now. Just think if you would have bought it 6 months from now, you're going to deal with another price increase and higher interest rates.
Oh my gosh, there are so many neighborhoods in Carmel in particular where a house has not been on the market in 20 years. And I don't mean the whole neighborhood, but like that house has not been resold in 20 years, and you're going to have a one-time chance to get that property, right? Because somebody moved there and they stayed for a very, very, very long time. And I just think you're going to start seeing some of that stuff. To your point, like, so if you see an opportunity,
you better jump on it.
Yeah, you do.
Well, especially because if you've been in the market for a while, let's just say you've looked for 2 to 3 months and you're not finding anything and then you see the one you really, really like, that's when you need to be prepared and ready to make that crazy offer that we've been talking about, because it's not going to be just by chance hoping. I mean, this is just my thought. If you're a buyer hoping it won't happen to you, you won't have to do that escalation. Yeah. Okay. Then you would want to have to do something like 5,000 over list. I mean, when you finally see that house, be ready to do it.
Yep. Okay. Hey, everybody. This show's getting a little long. We're at 22 minutes. I just want to tell you this show has been brought to you by Executive Portfolio Magazine and also SimpleMortgage123.net. NMLS 1821008. If you have any questions on mortgages, give us a call at 317-376-8001. Shelly, if somebody wanted to get a hold of you, how could they do it, please?
You can reach me on my cell phone, 317-201-2601, Shelly Walters Realty Group.
Kyle?
Sir?
How would they get a hold of you?
It's Morris Property Group with FC Tucker, 317-649-5122.
Is that with FC Tucker?
It is with FC
I just want to make sure we got FC Tucker in the game.
Carmel.
And let's talk about Keller Williams, Justin, with Keller Williams. Is that Indy Metro North? What?
Northeast.
Northeast. What do they have a Northwest?
There's a North.
Do they have a South?
Yes.
Okay, what's the difference?
And a West.
Are the Northeast agents the better ones? That's what I've heard.
Well, I cannot comment on my fellow employees. I think we're all great.
All right. And how would they get a hold of you, Justin?
Phone number 317-507-5599. Website fishers.realestate or customcontainerbuilders.com.
Okay, everybody. Hey, thanks for listening. And we're going to have more updates on inventory next week. And it looks like the market is really starting to shake it. So call one of these realtors to buy a home. Thank you, everybody.